I have looked at the chart of the pound against US dollar and euro US, and these two currencies have broken solid key level and they are going to drop coming days and weeks. On Tuesday, the 16th of April, the Federal Reserve Bank Governor Jerome Powell was interviewed, and in that interview, he said that the Federal Reserve Bank actually is expecting inflation to drop towards 2% before they will begin to cut on interest rate. And based on the available data, the inflation level is actually not coming down as expected. That means the Federal Reserve Bank is not going to be cutting their interest rate very soon. And the implication is that US dollar is going to be strong in the coming period. So in this analysis, I want to go to the chart, show you how we can enter this trade at the right place and make more than 500 pips. In addition to that, I'm also going to use the Excel, the ATR calculator I prepared to show you how you can organize your trade with the proper lot size and the proper risk in order to maximize the return on your trade. Okay, if you're a beginner or an experienced trader, it's nice that you watch this video from the beginning to the end, as it contains very valuable tools that can help you. This is how I'm going to trade the pound against the US dollar. If you look at the chart on the weekly time frame, what you will see here is that there is an immediate high here at this point, and there is an immediate low at this point. Now, in between this high and this low, there was another low here that has been taken off. Now, those 3 points are going to inform what I am going to do in this trade. For the fact that this low was broken, it shows that the momentum is very strong towards the downside. Okay, so I am actually looking for sell on this trade, but I'm not going to make my final decision until we go to the lower time frame. If you come to the lower time frame, you will see here that based on the trend from the daily time frame, you can see that there is a mini downtrend from here. This was a high, the market did a low, created another high, came back here, gave you a low, a high, and has given us the final low. So we're expecting a high somewhere and the low to continue. So this is clear what we will be doing. We'll be looking for a sell. So if you come to the 4-hour time frame, this is the 4-hour time frame. You can even see the trend better self. From here, a high, a low, a high. This is the low and this is the high, and the final low is here. So if you take Fibonacci retracement from this high down to this low, I am going to be looking for a sell position. So I am going to be taking a sell position as the 0.618 or this is 1.8 level. So this is the point where I will take my sell. Let me change the color of that to maybe green. Okay, so that is where I'll be looking to take my sell. Okay, from here down, I'll be expecting this market to push from here to around this zone, and we can now take the trade. So I'll be taking a pending order. Another point where I can take another trade, it is at the 0.78.6 fib level, which is the 78.6% level. Anything that happens between this space, as far as you see reversal candlestick patterns within there, I'm going to take the trade. Where am I going to take my stop loss and my take profit? I like using a risk reward ratio of 1:3. So this is the entry point, 1.2596. I developed what is called the ATR calculator. It calculates where I should place my stop loss, where I should place my take profit, what lot size I should use based on the equity that I have. Maybe if you have something like 5,000, and I do this calculation based on the volatility, how much every particular currency moves every day. So what I will just do, if I go to this website, investing.com, this is one of the most reliable method to set stop loss and take profit. Now, if you want your stop loss to be very small, you can use the daily data, but most of the time it's very good to use the weekly. I want to use the daily data. Now I will come and download the movement of this currency pair for the past few days. Okay, I will copy those data and I will paste it on this my calculator. So once I paste, instantly you see that this market has calculated the average true range for the past 4 days, for the past 12 days. Okay, and it's 0.33%. That's 0.33% for the past 12 period. Okay, so once I have done that, I'll come to the analysis that I have done. This place, the entry point where I want to enter the trade is at 1.2594. I will take it to 1.2594 for a sell. 1.2594 for a sell. If I enter it, you will now see that the stop stop loss should be at 1.2635. So the stop loss should be at 1.2635, 1.2635, which is around here. Okay, this will be my entry point. If I'm going to get a very small lot size, is going to be at this point, 1.2635. Because once the market moves to this place, the volatility says for it to get to this place, it will take a full day to get there based on the volatility for this period. Okay, then my take profit, I will now target this level, so that way I can catch a risk reward ratio of 4. A more conservative trader, you come here, change the data to weekly and copy the data to the ATR calculator that I have developed. What you see there is that based on the volatility, I am entering the trade at 1.2594. The equity here, let's say, is 1,000, and I am going to risk 2% on this trade. Automatically, you see the lot size for sell says I should use 0.048. So I am going to use 0.04 for this trade, and you can see that the number of pips is around 41 pips. So that is how I'm going to set the stop loss for this trade. Right, so if you go here, you can see clearly that this method actually works. So I'm going to enter the trade here. I'll keep stop loss at that point, then I am going to target here. So the calculator shows me that if this trade goes against me, I will lose $20. Then I am willing to lose $20 in order to make $80 on that trade for a $1,000 trading account. The second trade is EURUSD. So we have EURUSD here on the screen. Let me delete all the drawings, and then if you come down to the weekly time frame, what you see on this weekly time frame, is just similar to what we saw on the pound against US dollar. There is a low at this point, which is the reference low, and there is a high at this point. So there was a low here which the market has broken, showing us that the momentum is strong towards the downside. On the weekly time frame, this is just what I do. There is a high here, there is a low at this point, and this is the reference point, and it has broken that point, showing you that it is coming towards this direction. Right, on the daily time frame, you can see that there is more evidence that this market is in a downtrend. So if you see that high, it touched the trend line, touched from here, came down to this point, came down, so it can actually come back there. So this is the evidence that we should be looking for a sell on this currency pair. So if you come down to 4-hour time frame, what you will see is that the market has been obeying this trend line itself, and from here it touched here, came down, went up there, came down, went up. Let's zoom this out. That trend line has held the price from this point. It has held the price, and we are actually in a downtrend. So the final thing is that after this high, it created a low, and it will need to come and create another high before the next low. So I use my Fibonacci retracement from this point down to here. My beloved 0.618, which is 61.8 level, is there. So that is where I will be setting my entry. So if I enter at this point, which is 1.775, I am going to set my stop loss and take profit the same way that I did using the pound against the US dollar. If you have any question, any currency pair you want us to analyze, drop it on the comment and I will surely attend to you. I will either do a screenshot of analysis and post it to you, or I will do another video to explain everything that you need